Hi friends, welcome back to the Big Joy of Learning with Bijoy Ji. Let's continue with Money Matters Simplified. Today we will discuss about credit cards and how they work. A credit card is not free money, it's borrowed money. The bank is lending you money for a short time, expecting you to pay it back later. Let's say you buy something for 10,000 rupees using a credit card. The bank pays the seller on your behalf and you have up to 45 days to repay the bank. Sounds great, right? But here's the catch. If you don't pay the full amount on time, the bank starts charging you interest. A massive interest of 30 to 40% per year. And this is where the real game begins. Now, here's something most people don't realize. Banks don't give you money from their own pockets. They actually use other people's money to fund credit card transactions. Do you know how banks make money from your credit card? They interest on your balance. If you don't pay the full bill, banks charge you high interest rates. This is their biggest source of profit. Merchant fees. Every time you swipe your card, the shopkeeper pays a small fee to the bank, usually 1 to 3%. This adds up to billions for banks. This also makes the merchants to increase the selling price to cover up this cost, not only for credit card customers, but for all customers, since they cannot have different pricing for customers. Late fees and penalties. If you miss a payment, banks slap heavy penalties on you. Annual and hidden charges. Many credit cards have annual fees, service charges, and even cash withdrawal fees that you don't notice. Credit cards are a money-making machine for banks. If you're not careful, you'll be the one paying for their profits. But wait, credit cards are not all bad. If used wisely, they can be helpful too. Credit cards give interest-free credit period up to 45 days of free credit if you pay on time. They give you cashback and rewards, earn discounts and travel miles. Credit cards helps in building your credit score and helps in getting loans easily in the future. Many times credit cards act as an emergency help, as it is a quick access to money in urgent situations. Sounds good, right? But only if you use it properly. If not, credit cards can quickly become a financial nightmare. These are some of the disadvantages of credit cards. Very high interest rates. Banks charge up to 40% interest per year if you don't pay in full. Debt trap. If you only pay the minimum amount, your debt keeps growing like a snowball. There have some hidden charges like late fees, annual charges, and foreign transaction fees which can eat up your money. This is why so many people end up in massive credit card debt. It's a trap if you don't manage it wisely. Here are few tips to manage a credit card properly. Pay full amount every month. Avoid interest, penalties and other charges. Spend only what you can afford. Don't treat it like free money. Track your expenses. Keep an eye on your statements. Avoid cash withdrawals. Credit card cash withdrawals have huge fees. Remember, banks and credit card operators want you to stay in debt. But if you use credit cards smartly, you can enjoy the benefits without falling into their trap. Now you know the truth. Credit cards are useful, but dangerous if misused. So, use wisely. Continuing with the topic on language of money, we'll talk about some key financial terms everyone should know. Financial literacy begins with understanding the language of money. See you soon. This is Darpana signing off for now. If you found this helpful, don't forget to like, share, and subscribe to The Big Joy of Learning. Money Matters Simplified. Learn, grow, prosper. Have a big joy of learning.